Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on 13th of April 2018, and we're going to be starting off with the S&P 500 E-mini futures market. So basically, this past week, this market again spent quite the bulk of the time basically just consolidating and being indecisive. Part of the reason had to do with the lack of major fundamental developments over the past week, which have usually been responsible for the strong moves in this market for the past several months. From the technical perspective, we basically have price sort of stuck between the 2660, 2670-ish resistance area, which was formerly a support area. We had a swing low created off of that level, and this level is now turned into resistance and just continuing to hold price up and not allowing the buyers to basically take control. On the downside, we basically have price held up at the 2600 major round number. We've had major instances of support at this level in the past, and recently too we've had multiple occasions when prices just tested this level and rebounded strongly. Just by the looks of it and the price action that we've witnessed over the past week, we suspect that we may actually end up seeing a break towards the upside here. A major reason for that expectation goes back to the way that we're seeing candlesticks develop here. Basically, over the past 3 to 4 trading days, almost every day we've had price testing the 2660, 2670 resistance level, which is usually an indication that the level is softening up and weakening to potentially allow for a breakout play. We're not predicting that breakout just yet because we don't have any price action developments to suggest that as yet, but we're seeing that we're possibly seeing the foundations and the build up towards that potential possible breakout towards the upside. A lot will really just depend on how price behaves in the early part of this week. If we do in the first couple of days or so see price basically break past the 2670 level, this level may then just turn into support and basically allow price to continue to propel north. Although we're also noticing that even as price breaks towards the upside here, it's not exactly going to be trouble-free. We have a bar low that's sticking out here, and if you really just stretch this level further back, we basically have a minor swing low also created off of this level in the past, and it's also the 2700 round number or the area nearby. So even as price breaks above the 2670 resistance level, it's not exactly, or may not exactly move towards the upside in a very swift and rapid manner. We may actually see some setbacks for buyers as price basically tags along. Even as price basically breaks past the 2700 level, there's going to be other important areas nearby that could then further uphold price as we see buyers basically take price level higher on this market. So an example would be this level over here. Again, we've had multiple indications of support and resistance off of this level in the past. It's roughly the 2750-ish area. You can see that we've had multiple candlestick highs and lows testing this area as either support or resistance, and there's no reason to believe that this level may not come into play as and when price basically hits it. But for the near term, we're expecting price to possibly try and push past the 2670 resistance level that we drew here initially, and that's really what our expectations are going to be for this market early on in the week. Although, like we said, we're still not seeing any core developments towards a breakout play just yet. We're going to be looking forward to those developments in the first few trading sessions of this week. Okay, so the next market we're going to be looking at here is a light crude oil futures market, which to us was one of the most important and interesting markets to follow the last week. So we've basically been talking about a possible breakout play for this market for quite a while. We basically found this market transitioning from a very strong dominant looking uptrend into a more sideways consolidation phase, where we're seeing price basically tag along a rising support trend line and basically get held at the 6600 resistance level over here. We basically saw a double top here. Price rebounded off of that double top and hit this rising support trend line. also which lines up with the 6200 level right around here. And since then, we've just seen the bulls take control here. And this past week, of course, we saw price finally pushing past the 6600 level, closing above, and the next few trading sessions, daily trading sessions, basically continuing to stay above the 6600 former resistance level. Although we're just looking at the price action a little bit closely, we're still not too confident about the possibility that this may actually be a breakout. And the reason for that is that although price has sort of ventured past the 6600 level here, we're not seeing the kind of bullish strength that you usually associate with breakout plays, where we just basically saw a couple of days that didn't hold much trading activity at all, and which possibly suggests that it could be too soon to term this price action as a true breakout. We may as well just push right back down on the 6600 level if the buyers here do not continue to be in control. On the other hand, if this continues to be a breakout play, as it is looking right now, the 6600 levels should really hold as support and allow price to just continue on with a more longer term uptrend that we've seen this market develop. This past week, this market obviously also benefited from some of the major fundamental developments as well. There was an important news coming out of China, being one of the major global importers of oil, and data coming out of the country showed that in March, the country's demand for crude oil came out at its second highest level ever, which is great news for the market, and of course, investors reacted accordingly. That also possibly explains why we had such a sharp move pretty much post the entire last week. Okay, so the next market we're going to be looking at here is the gold commodity futures market. Also an interesting market in terms of the price action that we saw unfold in the past week. For this market, we've been talking about a very important resistance level at the 1350-ish price level. Of course, we've had multiple occasions when price held as resistance at this level. And this past week, we basically saw a bullish candlestick that poked past the 1350 resistance level and wasn't able to close strongly enough to make it look like a typical breakout play. And we actually had price basically closing just about at the 1350 price point. And right after that, we just saw the sellers continue to dominate again. So we basically had a textbook fake out play off of the 1350 level here on this market over the past week. Interestingly though, we're noticing this very, very steep rising support trend line. We've now had 3 touches of this trend line, and price is of course just continuing to hold as resistance at the 1350 level. Which basically tells us that the squeeze here created by these two support and resistance tools in terms of the horizontal support and resistance level and the rising trend line is just continuing to squeeze the market here, and it really doesn't have a lot of space to be consolidating much longer, and which could possibly indicate that we could see a breakout either towards the upside or the downside eventually in the days to come. Although just by looking at the fact that we've had more frequent touches of the 1350 level here, including this fake out, that even though the sellers did dominate for a while, we really just saw the bulls sort of try to regain control here, which is again typical of a consolidating market and a market that's just mostly indecisive. You don't really see one side of the market dominate the price for too long. And so naturally we have the bulls come in here again, and we're really just seeing a build up as price eventually tries to break past either the 1350 resistance level or basically go right down and break underneath this rising support trend line. Although if we do actually see a move towards the downside, we wouldn't actually be entirely in a cozy breakout play situation, because even as price just continues to trickle down, of course there are multiple minor and major support and resistance levels that will be continuing to hinder price as it goes down. Just looking at the fact that price breaking towards the downside underneath the rising support trend line will basically just sort of take it back again into the original channel that we've been talking about for this market, which is basically contained within the 1300 major support round number and the 1350 resistance level. Although, on the other hand, if we do actually see a break towards the upside, it could also indicate a breakout basically past this more broader consolidation phase, again marked by the 1300 level and the 1350 resistance level, which could basically end up giving us a more sustained and continued price movement in one direction. That's going to be towards the upside in this case. Okay, so the next market we're going to be looking at here is the Euro currency futures market. This is also a market that just continues to consolidate and basically trade in a more indecisive fashion. We've been talking about the 1.22 support level for this market and a very major level, a major resistance level for this market around the 1.25 round number. We've now had multiple occasions, at least 4 times, when price has basically found major resistance off the 1.25 level and rebounded strongly. For now, we're pretty much stuck in the middle of this range. And even though we just continue to look at this as a horizontal channel, we're also keeping an eye out for a possible tightening up of this market via some trend lines. So if we draw this trend line over here and stretch a resistance trend line right around here, we can also see that we could possibly also be starting to tighten up and squeeze within a wedge pattern formation, which could eventually lead us to the point where we will see the much anticipated breakout either towards the upside, which would indicate that we would continue with this more longer term swinging uptrend that we've witnessed for this market, or we could be breaking towards the downside for a more extended pullback into the longer term uptrend, and where we could possibly see price basically take out this low, this important low around here, and possibly even hit these highs around here. So until then, it's really just a waiting game for us, and we just continue to look for more price action signals and indications that we could be nearing a breakout for this market. Okay, so the next market we're going to be looking at here is the 10-year Treasury note futures market, which didn't exactly perform the way we had expected for this market to perform in the last week. So for this market, we've been talking about this more near-term or short-term support and resistance level marked by these 2 important bar lows sticking out of the level, and later on we had multiple occasions when price held as resistance at this level. Eventually, when we had this candlestick basically closed strongly above and an eventual pullback which sort of held at the level, and we saw some bullish activity come in, it made us feel that this level would possibly now continue to hold as support and allow a launchpad for price to basically test higher price levels, including some very interesting levels such as this one over here, where we had a very, very sharp bounce in the recent past. Although none of that really transpired, price just lost momentum, or we should say buyers for this market lost momentum, and eventually the sellers were able to dominate close to the end of last week, and we did actually close authoritatively and strongly back underneath this level. Now, the strong move towards the downside could mean one of 2 things. Either this could mean that price will probably now just continue to consolidate and go sideways for a more elongated consolidation phase following a sharp move down over the more longer term, or the other possibility is that we could just continue to move sharply down and retest the major 120 round number that initially held price up while it was in this strong downtrend. The latter condition, or the latter situation where we're proposing a stronger move down into the 120 round number could be a very interesting one, because eventually if we're able to break the 120 level and actually authoritatively push down, pull back, hold as resistance over here, we may just end up continuing with a more longer term downtrend that we've seen for this market over the past several months. So that is a possibility that we're going to be looking out for. But on the other hand, just looking at the price action in the market rhythm in the more recent weeks, really expecting price to just consolidate or see price consolidating shouldn't really surprise us or basically any informed trader out there.